pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
How's snow this morning?
Oh, it was good. It was,
Not too bad.
we live the same direction, so we rode in together.
Real nice view.
Where do you live?
I live on Stapleton Road.
Okay.
You live in what? Where do you live?
To ferry it.
We met at Stewart's.
This is from
Picking up at Stewart's.
Joy.
Well, welcome Liz and Andrew again from Bowers and Company. I think the process we've gone through in the past is basically kind of go through changes in reporting,
Mhm.
any information you need from Lyle, your timeline, and I guess costs for the audit.
Sure.
Kind of the process to go through. If you want to start us off.
Sure. Which one would you, is it JCLDC first?
JCLDC, I'm sorry.
Okay, so we'll do that one first. Okay. Well, good morning, everyone. I think we've met everyone here. I'm Liz Bush, the audit partner with Bowers, and this is Andrew Swords. He's the audit manager. We've both been on this audit for a few years now. So we're here today to have the pre-audit meeting. And one of the things that to note this year is that this is going to be a 15-month audit. And the reason being is that we were going to do that short stub period last year from 10/1 to 12/31 with the change in the year end. However, the authority budget office, who you report to, contacted Dave and Lyle and said, no, we would prefer a 15-month financial statement. So I'm assuming they haven't changed their mind or anything, which they can. So with that, we'll issue 15-month statements, okay, for both the JCLDC and the IDA. And then also with the JCLDC, I did confirm with New York State, the Charities Bureau, because you have to file a New York return with them. They're fine with accepting a 15-month statement. My concern was maybe they'd want to split that out. The only thing that we have to split are the tax returns for JCLDC and JCCFDC. So there isn't a mechanism in place on the IRS filing of these returns that would allow us to just do 15 months. So I'm going to do 12 months, your old 10/1 to 9/30/2022, and talk to Lyle about that, obtaining those trial balances. And then we'll do a short return, and then we'll file all of those. So just a few little housekeeping things with that. Andrew did put together a request list, tailored that for a longer period, just gave that to Lyle. Our plan is to start this audit on January 26th. We talked to Lyle about that to make sure that this is agreeable. So it's usually just a couple of days to finish both. And we do quite a bit of work at our office too, preliminary before and after. My understanding with the board meeting that it has been moved to March 9th, correct?
Yes.
Okay. And that's to enable us to issue these reports because of the change in, moving to a calendar year end versus that fiscal year. There's many more audits at that time frame. And then, of course, we have a longer period to audit. So thank you for just giving us that extra week to pull this all together. And also for the JCLDC, it would make sense just to do a single year presentation because you're moving to that 15-month presentation instead of doing 15 months to 12 months a year before. It doesn't really lend to any much comparability. And on the IDA, that's reported in a single year because that's a governmental entity. So all of those things. We do have the engagement letters as well. So for JCLDC, we did send information over to Dave and Lyle beforehand. So with a longer period, we're looking at an audit fee of the financial statements of about $8,000. We do have to issue 2 returns, so each of those will be $600 a piece. So it'll be about $9,200. Based on everything I've reviewed so far, it does not look like you need a single audit for JCLDC. Okay. Now
Only for IDA.
Pardon?
Only for IDA.
Only for the IDA. So with that, if we get into the JCLDC and you have quite a bit of ARPA monies deferred on your balance sheet. So what that means is if we get in there and we look at it and we determine that you may need a single audit, we will let you know, immediately. I don't think you will, but there's always that chance because you do have 580,000 spent on the
Yeah.
ARPA money. So that's close to
In the
750.
LDC, that's transferred from the IDA.
That's right through the
for
IDA.
administration.
Okay. All right.
It's not
So-
granted to LDC.
Right, but it's
It's through
transferred, right. And so we'll keep a close eye on that immediately. That's one of the things we like to do right away is just make sure if there's any changes or anything that's, that we need to do differently, we will address that
That'll be
first.
covered through the IDA because it's transferred anyways.
It should, yes, yes. I mean, technically, when you have these grants and you have a not-for-profit, and they're having a single audit, the YMCA will be having a single audit this year, the IDA will be having a single audit, as that money, that federal money trickles down through the state, through the IDA to the, everybody gets subject to a single audit once that money leaves, the federal. But,
So what's the
Yeah.
threshold? Is the threshold?
the threshold is $750,000. So once an organization, whether it be a not-for-profit or a governmental entity, once you spend $750,000 in your calendar year, or in this case, your 15-month period, you have to have a single audit. So I think the IDA had a single audit probably back in 2014 or so. There was a single audit, I remember.
Last time we had it was Bruce did the audit.
Oh, Bruce, yes. So it was, then that
Wow.
would have been prior to
Oh, that was-
2013, yes.
Yeah.
So, but we see a lot of single audits. Every single one of our 20 school districts had a single audit this year. Many of our organizations, it's very, very common auditing type that we do as a firm. We do a lot of single audit work. So we'll make sure that we address that. That would be. So back with the JCLDC, those are the fees. There's a new standard this year for the not-for-profits and the governmental entities, and that's the lease standard. So what that means is, since you rent office space here from WCLDC, we'll have to record a right of use asset and liability on your balance sheet. And Andrew does quite a few leases calculation, and then what we'll do is, we'll have to put that on your balance sheet. And if there's any other equipment that has a lease period of 1 year or more, maybe copiers, something else that you're renting, let us know. Copiers, yes. And we don't, look at every little postage machine lease or anything. We take materiality into account. So we'll look at the copier lease, see how many more periods are left on that, whether it's a 1 year period left or whatever, and we'll address it from there. So that is a new standard. Didn't have a prior year management letter with JCLDC, but we always want to talk about if there's any legal issues we should be aware of. Maybe we need to send some legal letters this year for JCLDC. If you know of anything, let us know. We'll get those prepared. Okay. And any change in loan activity, maybe some significant write-offs this year that we should be made aware of, or anybody,
Yeah.
any new significant commitments at the end of the year. So, okay. And any questions for us for JCLDC?
We did a lot of grants of ARPA money out to individuals. Are you gonna have to review each of those applications and how they perform?
What we'll do is sampling. We'll have a sampling technique for the ARPA money. So bear with me a minute here. So for JCLDC, that one's behind here. I got all the, okay.
We were
So-
the LDC, weren't they all? Food.
Food, childcare, small business. So quite a bit of that is deferred on your balance sheet. So that means it hasn't been spent yet. If Lyle, you
That's right.
correct? Okay. So when it is spent, when that money's spent, we take a sample. We don't have to look at every single one. Yeah. And that's true. That'll be true for the IDA as well. At any type of grant compliance work, we'll just sample based on the population. So we don't look at every one.
in terms of the 15-month deal there, Liz,
Mhm.
a lot of reporting is based on a 12-month period.
Mhm.
That's why we're doing the 2 then? Because like the rules and regulations say, you know, your, whatever you spend, like 750,000 in your 12-month, typically 12-month period, right?
Mhm. Right.
Does anything apply? We have to have, you know, time sensitive, anything, because we're going to a 15-month audit here?
So the time sensitivity is, and everything really, you have various reporting entities that you have to report to. You have, your normal financial statements. Now you have a single audit, the tax returns on, but the Authority Budget Office, New York State, ABO, they are the entity that, they had a conversation with Dave and Lyle, and they just said, no, we don't want to have that little 3-month audit that we planned to do last year. We want it all just in 15 months. I don't know if they even had a reason, but they just preferred it that way.
Yes, they want us to report, because we also have to report our job creation, retention, all those kind of measurements.
Right.
On that 15-month basis, they want them to coincide. And
Okay.
the reporting, they said, should be coinciding with your fiscal year, so.
Okay. So, normally it would be 12 months, but since they want a 15-month, actually it works out better for you because then we're just doing one larger audit. I mean, anytime that you have to take audit work and split it into 2 different actual audits, the cost is a little bit more. So this is actually better. And that would be due still March 31. So anything that has a 12/31 year end, any of these like local development type agencies or IDAs, it's 3 months after your financial statement date, which would be March 31, would have to be submitted. Used to be you would have to have everything in by December 31 when you were at 9/30 year end. So that's the time sensitivity there. We did ask about moving that board meeting back to March 9th, just so this is the first year, so it's going to give us time to get everything ready. And then the other time sensitive thing would be the IRS 990 and the CHAR 500, which is due 5 months after your year end. So with a September 30th year end for the JCLDC, for tax purposes only, that would be due February 15th, but we can always get an extension and just file it in March. And then we'll have another tax return right after that would be due in May. So we'll split those up.
So the IRS would have us split the tax returns.
Pardon?
The IRS would have us split the tax returns.
Yes, they will not accept a 15-month 990. I looked into that. But that's fine. We'll split it. And I mean, and I did, one of the more concerning areas is that single audit, because you have to report to a federal clearinghouse. And I did some research on that, and it's fine that in cases when you change your year end, you just mark a box on that form and submit it with 15-month statements as opposed to 12. So, so again, our goal is to have these. I would say by the beginning of March, so that Lyle can review everything's ready, so that everything can go out to the board, have board approval, and then everything can be filed through your Paris reporting by March 31. So.
Okay, now do we have a letter from, do we usually have an engagement letter?
He has 2
okay.
copies, right?
Okay, good.
One to keep and one, for your records. And then, so I don't have anything else on JCLDC. We can go into the IDA.
Any other questions? Motion to move the engagement letter to the board.
Second.
Any further discussion? All in favor?
Aye.
Motion carried. Anything else for the audit committee, the LC, or GCLD? Have a motion to close the meeting?
Second.
All in favor?
Aye.
Motion carried. Okay. Move on to the JCIDA audit committee meeting. Call to order December 16th. Again, to discuss engaging Bauer & Company for the year-end audit. Anything beyond what we've already talked about already, Liz, or for the IDA?
Just a couple of additional items here, very similar to what everything I just presented. There is a new lease standard here with the IDA. So if anything, Lyle, that you can think of on the IDA's books that you're leasing, let us know and we'll apply.
I don't think we really have anything.
I didn't-
much in there.
Right. It has to be significant, like postage machines, we don't typically, it's not material, it's not just larger scale items, so. And then, so for the IDA, any, concerns that, should we be sending a legal letter out to any attorneys, anything of our, that we should be made aware of? We can make sure that we're,
I'm not aware of anything, but you usually send the letter out anyway, don't you?
no, we don't, we used to years ago. We've changed that because what happens is, oftentimes when we send a legal letter to a firm, they'll charge you for it, okay?
Often, always.
Well, yeah.
Okay. So really how the auditing field has evolved, it's more of a discussion with you and, if there's something significant or very uncertain, we will send a letter. But if it's just routine type things, so if you have a law firm that's looking at changing your year end, changing your bylaws, or you have some loans, evictions, whatever, an organization could have, that's normal stuff. We wouldn't send a legal letter. It's just things, lawsuits and things like that. So
I don't know of anything unless David has something getting away that I don't know about.
okay, so for the IDA, any significant changes in the loan activity, any significant write-offs this year, or concerns, or any bankruptcies that we wouldn't send confirmations to? Because we do confirm a lot of these balances.
We have one major account that we've sent to our attorneys for collection,
Mm-hmm,
but no write-offs, fortunately.
mm-hmm. Okay, one account that's gone to the attorney for collection, okay. So they may not answer. That's the reason we ask, because we often send these confirmation letters and the responses are very, they lack when there's issues involved. They might not. Organization just might not send it back, so. Okay. Any commitments or commitments later this month for new loan, like significant commitments that you're aware of?
No, coming up
Okay,
next year.
Yeah, next year we have a couple probably that will be significant, but
Okay.
nothing yet.
okay. So for the IDA, you will have the YMCA money, the Department of Defense, that flows through the IDA. Also, you have ARPA money. So that will definitely have a single audit. It's probably about 7 million or so in expenditures. So we will sample that and have the single audit for the IDA. There is a significant amount deferred on your balance sheet for the airport sewer for the ARPA money that's not spent. So we've been looking at this. No prior year management letter on the IDA as well. And I guess I would, for either the IDA or JCLDC, are there specific areas of focus that the audit committee would like us to address, or something, we have a scope that we normally perform on the audit of certain things that we have to do. But if there's some areas of interest that you would like us to address in more depth, just let us know and we can do that. So.
Okay.
And I got the fees on that one. I have those. All right, so this one, the IDA, the whole IDA is a larger organization. So this year we have the audit of the financial statements for the 15-month period is going to be about $14,900, $600 for each of those tax returns. That's the JCCFDC, and about $48